Your chart probably looks a little something like this. You have the RSI at the bottom, then you have all these squiggly lines as the moving average, then you have the volume down here, and then you wonder why when it comes to reading the markets, understanding whether it's going to go higher or lower, it's very difficult. Well, it's very difficult because you have too much crap going on. But if I told you this is exactly how I trade on a consistent day-by-day basis, no indicators, no volume averages, no nothing, just price action and blank charts. This way of trading within the last year and a half since becoming a full-time trader, I've made well over 6 figures in payouts. This exact way of trading is how I've been able to help one of our students here, Jordan, Spark, just a little over a week ago. Yesterday passed his funded account, and the next day on that same funded account that he passed yesterday was able to make a little over $3,000. In this video, I'm gonna give you the exact 3-step process that I look for on a consistent day-by-day basis that's able to allow me to come into charts with no indicators, no volume, no nothing, just straight price action, and how I'm able to read it and comprehend it. And this way of trading allows me to find a setup consistently on a day-by-day basis and makes my trading a lot easier. Only thing that I ask you is that you watch to the end, because understanding every single step and outlining it within your own trading is going to be very crucial if you want to become a consistently profitable trader. The way, if you want to be like Jordan and join Spark, which is our coaching program where we help either beginner or losing traders become consistently profitable within the next 6 to 12 months, then you can click the first in the description and book a free call. Talk to me personally and see how I can help. And the first step that we're going to be utilizing is time. And let me break that down. If you want to become a consistently profitable trader, you have to develop a routine and you have to understand the different times within the markets. 3 specific times we want to mark out and focus on a consistent day-by-day basis is first the Asia session, the London session, and then the New York. Asia session is between 8 to 12 a.m. EST. London session is between 2 to 5 a.m. EST. And the New York session that we're going to mark out all markets is between 8:30 to 11 a.m. EST. So these are the 3 specific times that we want to focus on a consistent day-by-day basis. Make this easier, what you want to do here is you want to go to the indicators tab and you want to search up kill zones. Specifically, it has to be kill zones by @Joshu. It's right here with 1.1k downloads. This is what you call a visual indicator. It's not like an RSI or a moving average which tells you when to buy or sell or anything like that. Simply just a visual representation on your chart, nothing else. It marks out all the specific sessions: the Asia session, the London session, and the New York session, the AM session, and then the PM session. We don't want to necessarily focus on the PM session, just the AM session. Specifically here, I'm trading the S&P 500, which is a future. So specifically, I'm going to be trading the New York session. So the futures market does start at 8:30. If you're trading an index, you want to be trading at 9:30. Because 9:30 is when the stock market exchange opens, and that's when that volatility kicks in. Our next step would be understanding market direction. Market can move in either 1 or 2 ways. First, either the market can go higher or the market can go lower. There's 2 specific patterns that the market can utilize on a day-by-day basis. So the market can see a continuation, where you can see here it creates higher highs and higher lows, continue to push higher, which creates what we call an uptrend, or it could create a downtrend where prices consistently create lower lows and lower highs within the markets. Be a continuation market. It continues that specific direction. Next thing would be a reversal market. It would be when price comes lower, establishes a low, and then it sees a reversal to go in the opposing direction. This would be a reversal to the upside. Right here would be a reversal to the downside. On a day-by-day basis, we're simply just gauging where the marketplace wants to go next. The price is going to continue to go higher or continue to go lower, or maybe it's going higher to reverse and go lower, or maybe it's going lower to reverse to eventually go higher. And these are typically the only 4 scenarios that price will create on a consistent day-by-day basis. Because when it comes to trading, you want to make it as simple as possible. And the less that you have to worry or try to predict or do the impossible, the easier it is to trade. So on a day-by-day basis, I'm simply just looking for if price is going to do one of these 4 things. Coming into the marketplace here, when we're creating what we call a daily bias, which is basically 30 minutes before the market opens, you create your narrative for what you're anticipating to happen. You basically want to gauge what is the overall market structure. And this is where we can incorporate that time aspect in it. And that you want to do on a day-by-day basis is you want to mark out all the different time zones, highs and lows. You can mark out these London session highs right here, mark out the London session lows right here. You can clearly see price came lower to kind of take out. We can also mark out these Asia session highs right here. We can also mark out these Asia session lows right there. Usually on a day-by-day basis, price will refer back into these liquidity pools. Creating my daily buys, I'm basically looking at where have we been, where we're currently at, and where do I anticipate price to go next. You see here that the market has been in an overall uptrend. This is where the market opened up during that Asia session, seeing this push to the upside. It gave a pullback and continued to go higher. When price reached this high point here, this is what you call exhaustion. Price reaches high point, it can no longer continue to go higher. Following that, we see this break to the downside. It gives me the idea that once price has reached this high point, could no longer continue to go higher. As we see this break lower, we can see price comes back lower to take out this original low. If we look at the 4 specific market directions that I talked about, which market direction is this specifically? Oh, this would be a initial buy, now a reversal. We can clearly see here that the market had opened up, seen this rally to the upside, reached a point to where it could no longer continue going higher. Now, as the market breaks back below the low, anticipate a retest, continue to go lower for now a reversal. I said the market can either go higher and continue higher, either go lower, continue going lower, either see a push higher to then reverse to go lower, could either see a push lower to find support to go higher. Those are the only 4 signatures that the market refers to on a day-by-day basis. Coming into a market, seeing how price can now break back above this high, seeing this push to the downside, gives me the idea that price is potentially in a reversal. And where can I then target? Then target this low right here. This is the Asia session low. If the market is in a reversal where it reached a point where it could no longer go higher, I want to take out opposing levels of what we call liquidity. Market goes from previous highs, previous lows to previous highs. So once we came higher and taken out multiple liquidity pools above these highs, and following that we see this break lower, we anticipate a reversal to now take out opposing levels of liquidity. So now this low right here, this is that London session low. Now we have this Asia session low. Coming to our third step is we're simply just creating our bridge, and we can utilize 2 things. First is entries, second is draw on liquidity. Every single day during the specific times that you trade, the market creates a bridge, goes from one direction to another. Entries is basically where the trade starts. Right, this could be your fair value gaps, this could be your order blocks, as well as this could be your breakers. And as I get onto our charts and break down this trade, I'll mark all those things out. So the 3 specific entries that the market reacts off of on a day-by-day basis. Draw on liquidity is simply where is the market targeting. The main draw on liquidity that price usually targets is 1, fair value gaps, and 2 is liquidity. Entries is where your trade starts, and draw on liquidity is where your trade ends. So on a day-by-day basis, I'm not trying to predict the markets. I'm not trying to utilize all these different indicators. I'm simply just trying to understand what is the current bridge that price is creating. It's trying to go higher, or is price trying to go lower? I understand that we're in a reversal because price reached a high to where it could no longer continue going higher, and we're seeing this break to the downside. Anticipating reversal, I want to be bearish. So I want to be selling within bearish levels of resistance. Price comes back into bearish level of resistance, I want to be selling from that level, go to my draw on liquidity, which my draw on liquidity is either fair value gaps or liquidity pools. You can see here on the 15 minutes time frame, there is not really any fair value gaps here that I can utilize. There is a liquidity pool, which is this Asia session low. I want to frame a short within a level of resistance within this range, come down into this liquidity pool. That's my bridge. Before the market opens, I'm simply just creating a bridge from where the trade starts to where I think the trade will end. Trying to predict the market, not trying to overcomplicate it, not trying to do all too much, trying to make it simple and easy to understand. Coming into our market here, the 2 specific time frames I'm going to utilize is the 1 hour and the 15 minutes. On the 1 hour time frames, I'm simply just marking out levels of support and resistance. First thing that I want to take note of is this inversion fair value gap. This right here was a bullish fair value gap, supposed to hold as a level of support. It breaks through this bullish fair value gap, now what you call an inversion. It not only validates that price is then bearish, because this was supposed to be a level of support, but price breaks through it, now it's bearish. Also, this is now a level of resistance. This validates that the overall market direction is not supporting bullish prices. This also validates as a potential entry, because if price can come back within this level, it should find resistance to go lower. That's the first thing. Second thing that I want to take note of is this last down close candle. It's my bearish breaker. So a breaker is pretty simple. I'm gonna go down to the 15 minutes time frame here. This is the formation of a breaker. I have this original high, this creates this low, then we have this higher high. Price breaks back below this low point right here, this level that last stock close candle that we marked out on the 1 hour is now a breaker. This is simply a level that once held as support, right? This was once a pullback to continue going higher. As broke back below this level of support, is now a level of resistance. Price can find resistance from to see a reversal lower. Creating my bridge, it's pretty simple. Have this inversion fair value gap, have this bearish breaker, or levels of resistance. So I'm not buying within the markets. Breaking through this fair value gap validates as a short setup. Price breaking back below this original low validates this as a breaker. This is not a bullish market at the moment, so I'm not looking for longs. Instead, I'm looking at a potential reversal taking place, meaning lower prices. These are the two specific entries that I want to utilize. The specific draw on liquidity that I want to look for is this low right here, as I can also take note of this fair value gap. The two specific levels that I can anticipate price to come down into, either levels of fair value gaps or levels of liquidity. Before 9:30 opens up, to trade based upon the manipulation. Basically, if I'm anticipating lower prices, I want to see the market open up, rally higher to go higher into my level of resistance, then break away from it. That's your manipulation. If you're anticipating higher prices, you want to see price open up lower to a level of support to find support to go higher, would be your manipulation. In this instance, the time that I'm trading is 9:30 because that's the stock market exchange open. The direction that I've created for today is a sell reversal. Price seeing this push to the upside, not continue going higher, breaks through these levels of support, which now we're seeing it act as a reversal. Bridge that I am creating is we had this bearish breaker, plus we have this inversion fair value gap. These specific levels can act as my entry. Specific targeting or drawn liquidity would be this fair value gap, then this Asia session low. The three specific steps that I look for on a consistent day-by-day basis that I'm able to any market condition, whether it be a bullish market, bearish market, consolidation market, any market I can trade any single day, 100 something days that the market is open throughout the year. This is how I teach my students to trade on a consistent day-by-day basis. See, it's not as simple as here's this 80% win rate indicator or 80% win rate strategy, this magical wand, and you're going to instantly make money. And how we've been able to create consistently profitable traders and even full-time traders here at Spark, because how we teach our students to trade is very logical. Why should the market go higher? Why should it go lower? Why should we enter here? Why should we sell here? Everything is logical and rules based. Trying to frame a story from what the market is telling us on a consistent day-by-day basis. We're not necessarily trying to predict the market, but we're simply trying to react in according with the market and trade with the market. This not only makes your trade less stressful, it's also a lot easier to learn how to trade and become consistently profitable quickly. It doesn't take you 3, 4, 5 years to become consistent. Most of our students become consistent within 6 to 12 months because how we teach just makes sense. It helps them learn quickly than anything else. If you got value from this video so far and you want to be one of my students, help you reach your first payout or make your first $10,000 or maybe become a full-time trader in the future, click the first in the description, go free call, talk to me personally, and let's see how I can help you. Now, last but not least, after we created our bridge, this is when we get into our exact execution. We marked out our specific levels, version fair value gap, the breaker, and we have our ending bridge, is this Asia session low. I want to see the market open up here on the 15 minutes. I want to look for the exact confirmation. The exact confirmation I look for is based upon what the market is telling me. Market opens up and it consolidates here and it shows that it does not want to continue going higher. Then we see a break lower. This would be my confirmation. Price has found resistance within this breaker, and off of that break lower, I can frame a short to go lower. If the market opens up higher within this inversion fair value gap and it rejects from it, basically signaling that it does not want to continue going higher, then I can frame a short to go lower. Market opens up here. See, right here, market opens up at 9:30. It's back within the low here of that inversion fair value gap, which we talked about. Then from coming back into that inversion fair value gap, you can see it reject from it and comes all the way back lower. When you see this specific signature, this is perfect. Once you marked out a level of resistance, if the market comes into that resistance and immediately leaves it, confirmation. That means that price came into this level and could not continue going higher. It's perfect. The live market, which I actually took this trade by the way, which I'm gonna show you later on, price came into this fair value gap and rejected from it. I was able to frame my short right here. Stop loss just back below this high point. Price tapped into this inversion fair value gap right there, rejected from it. This is now a strong high point. So price should not come back up here. I can trust my stop loss back up there. I was basically reaching back below these lows. It was a 2.6R. As you can see, I ended up finding resistance. It's all the way down there. Understood what was one of the forward market directions. Was it going to go higher? Was it going to go lower? Was it going to reverse higher? Was it going to reverse lower? Obviously, it was going to reverse lower. Reach a point, could no longer continue going higher. Break, anticipating a pullback, see a reversal lower. Then I frame my bridge. from the entry to the exit. So you're gonna find the entry, breaker, or inversion. The exit was the Asia lows. Yep, came higher, could not continue going higher, reverse lower, lower. That's it. That's how I trade on a consistent day-by-day basis. That's how I see the charts on a consistent day-by-day basis. Obviously, you're not going to get to a level of expertise like I am, because I've been doing this for years now and spent thousands upon thousands of hours on the charts. But as you continue to utilize this framework, as you join Spark and become a student, reading the markets become a lot easier. Becoming a consistently profitable trader and reaching that goal isn't as hard as it seems. It doesn't need to take you 3, 4, 5 years. You can achieve it in 6 or 12 months if you just focus on one specific way of trading. A consistent day-by-day basis compounds over time. I mentioned to you guys this was the exact same trade that I took here on September 16, 2025, which made me a little over $6,000. It was basically $1,200 across 5 funded accounts. See, this was the exact execution when price tapped into that inversion fair value gap right there, followed by the rejection. Quickly see the exact exits right there at the Asia lows, just as added proof that the lessons, the concepts, and everything that I teach on this YouTube channel, I actually use within my trading to make anywhere from $10,000 to sometimes $20,000 a month consistently for the last year and a half. Well, I urge you guys that you were taking notes and paid attention throughout this whole thing. Go onto the charts, backtest this, and hopefully find similar results. Really hope you guys learned a lot from this video and got a lot of value. Make sure you guys click the like button. It only takes you 1 second. If you want to become my student and trade live with me every single morning, weekly coaching calls with the students, plus 20+ hours worth of education, helping you become a consistently profitable trader within the next 6 to 12 months. Click that first in the description to book a free call. Talk to me personally, see where you're at, and see how I can help you. Watch another video that goes over rejection blocks, which is one of the hidden concepts that not a lot of people talk about that's made me a lot of money trading. Then that video is about to pop up right now. I'm your mentor, Arkhamtrades. Be safe.